Are you still wondering whether you should get a mortgage pre-approval? You know, it's a question that comes up quite often when I'm dealing with buyers. And it still puzzles me to this day how when we start a conversation with buyers that many of them have not spoken to a lending institution or a mortgage broker. And they just make the assumption that they're going to have no problem getting a mortgage because they feel their credit is good or they have a good job or, they just feel that they can get the mortgage pre-approved. Well, in today's environment, it's so important to get that duck in a row, so to speak, before you start shopping because we're in such a competitive environment. It's almost impossible to get an unconditional offer or a conditional offer approved. So if you're going to not get a pre-approval, you're being quite foolhardy in making unconditional offers until you know what you can deal with. So realistically, you should really get a good handle on your budget so you know what you can afford. Lenders look at a few things. They look at your credit rating. They look at your ability to sustain payments, which they call the GDS and TDS ratio. Those are the percentages of your income, your job stability, all of that kind of stuff. And you need to be aware of what your options are because when you go into the arena of trying to buy a home in today's environment, it is very, very tough. We were showing a property the other day, which was, listed, I believe, for around $799,900. And it was a nice home. But, within a matter of hours, we were informed by the listing agent that there was 29 offers on the property. So do you think that there's going to be any chance whatsoever of the seller entertaining an unconditional offer? Very unlikely. The only likelihood that could be is that you make an offer that's so much more attractive than the others and it has a condition. But, even with that, a lot of sellers won't take the chance of taking the risk of accepting your offer, knowing that, they've lost that situation where 29 offers are on the table. So you really have to be prepared to come to the table competitively, and that's why it's important to get pre-approved for a mortgage. And when I say pre-approved, don't just go to your bank where, they just run a quick mathematical calculation for you and tell you here's what you qualify for, because that's not the way to do a pre-approval. The way to do a pre-approval is actually going through the process of providing job letters, providing all the information that a lender actually wants to see if it's a real mortgage. Because sometimes there are lenders that just provide pre-approvals because they're so inundated with business that they don't have time to underwrite pre-approvals. They're only underwriting live deals. So you're going to be dependent on your mortgage professional to be able to assess this information. That's why it's very important to deal with a mortgage professional. And when I say mortgage professional, I mean a mortgage broker, like my wife Karen, for example, where they can assess the information and tell you, well, this is very likely what you're going to encounter in the lending environment of today. So you really need to know that so you have a chance of getting your offer accepted. You also need to have a plan A, a plan B. What I mean by that is, sometimes you're going to make an offer on a property and the property may not appraise. Okay. And what I mean by that is there's really two elements about financing that banks really concern themselves with. Number one is, can the client afford to take on this mortgage? Okay. Do they have the stability and the down payment and all that kind of stuff? Number two, is the property worth what we're lending on? Okay. So the bank is really the one that takes the risk. So they have a certain element called the loan to value. So in other words, they'll only go a certain percentage of the value of the property or the purchase price, the lesser of the two. So if all of a sudden you've paid $50,000 or $100,000 more than the actual appraised value, that means you have to come up with the $50,000 or $100,000 on your own. So unless you have those resources at your disposal, then you're running the risk of putting yourself into a legal situation where you could get sued, lose your deposit, and much more. Okay. So it's very important that you get a pre-approval before you start shopping for a home. Okay. We want to arm you with, the best chance possible of getting your offer accepted. And the only way to do that is to get you into a mortgage broker and get yourself pre-approved. Okay. Now, if you want to do that right now, you can go to www.myhomepreapproval.com. and that will take you directly to my wife Karen's page, and she will help you get mortgage pre-approval. And when you do that, try and provide as much information as you can. This will take you right to the application. If you don't know the answers to some of these questions, by all means, leave them blank, but try and fill out as much of that information as you can. I know a lot of times Karen says she gets applications from people, provide, name, address, date of birth, all that kind of stuff. And then when it comes down to down payment or assets or employment, they leave it blank. Well, this is one of the most important parts. We need to know what you're making so she can do the proper calculations in terms of what you qualify for. So check it out. Go to www.myhomepreapproval.com. You're going to land directly on my wife Karen's application site. Fill it out. It's secure. It goes directly to her. She can start working for you and getting you a mortgage pre-approval so we can turn you into a homeowner sooner than later. Thanks for listening, and I hope you have a great week.